Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.3% today, and really all three of the big indexes were down today. But we were up. Actually, we did really well today as a whole, especially in our models. The small cap index was up a lot today. We have two pieces in each one of our models on both the traditional and the ESG side. In these reopening situations, small caps do better, and today the focus was on reopening. The 10-year Treasury started to move up in terms of the yield. And so, what the bond market is telling us is that they see this coming movement of upward economic growth. And so it is readjusting itself to that growth. And so that's a good thing, actually. Though, if you watch the bond market, it's very much so signaling that we're looking at a very strong economic growth. Normally in a recession, you have this recession that can be quite dramatic, but the recovery is usually, fairly slow because you're still dealing with the economic issues that are happening. In this particular situation, we had a very abrupt downturn, and it looks like we're going to have a very abrupt reopening. So it's different. This is not like a normal economic cycle. You throw in all of this stimulus that they've put out, as well as the possibility of more infrastructure programs and things that they're working on, and that makes that economic reopening even stronger. And so, again, you want to be in those value stocks, those reopening stocks. And so today we made one adjustment to the portfolio to the traditional model. We took out one of the two energy pieces and we added in a transportation piece. So the idea behind this is that things are going to move more. So people are going to move. So this has airlines and those types of things, and things are going to move, right? As restaurants reopen and retail stores reopen, and people get out into the malls, somebody's got to get that product there. So we have, marine port services as part of this transportation, airlines, railroads, trucking companies, delivery companies like UPS and Federal Express, et cetera. So it's really incredible. All those things are going to go through those companies that we have in that index. And today it had a really good day. And I'm very excited about that as an addition to the portfolio. And then people are going to move places. They're going to move to restaurants. They're going to move to Walt Disney. They're going to move to these other, Hawaii, wherever it might be. Going to be a little while. There's still some issues happening with the virus, but personally, I just have a really hard time seeing, at least here in America, especially, things shutting back down to the point where we were last year, where it has really big economic impacts. It might be a little while before we really see a lot of things. We also own a lot of different. Live Nation, which does concerts, and Madison Square Gardens in our portfolio. Matter of fact, Manchester United, which is the big soccer team in England, is in the portfolio. Maybe it takes a while for them to allow full audiences to come back. Again, those are sort of under different regulations within those states or those counties and what have you. So, we'll see how that works out. But once they do, we're there. We own those stocks. I think, we're going to look back and say, hey, we got them at a pretty good price. We weren't in at the very beginning. We were working on the other stuff from last year, which did very, very well, and we transitioned over to this. So, and then of course on that bond side, you got to be real careful, keep things real short. I think, again, as that yield continues to come up, and it could come up quite a bit more, in my opinion, we're going to see the price of bonds come down even more. So we've got a lot of short-term stuff, which holds in a lot better. And then of course we've got the inverse pieces, which, go up when the bond prices go down. So we're there. We're waiting. Today was a reopening day, so to speak, and hopefully we continue to see some more and more and more of those. I think that's where things are heading, and then we've got the right situation, the right portfolio for that. So look forward to seeing what's going to happen tomorrow. Thank you very much. Also, I'm really excited to be expanding our offering for investor education with a Go Live with Tom segment that will be live on Fridays starting April 9th. All you do is go to golivewithtom.com. If you have any questions, you'll be able to ask them at Ask Tom at Go Live with Tom. Just send an email. You can send those now if you'd like. Anybody can come. We'll be talking about financial planning, tax planning, investment management. The object is to help people build and maintain their net worth. And I think this will be a great environment for that. So please join me. I look forward to hearing from you then. Thank you.